Today we're going to talk about how to really drill down into your profit assessment. If you've already done a profit assessment for your business, for your Amazon business, you've got some idea about your percentages that you might allocate to your different profit first accounts. Amazon businesses are kind of unique in that you have a windfall type opportunity in the fourth quarter. That can throw off your numbers for your whole year. So if you're looking at your information for all of last year, the fourth quarter that's in information that you're including in there can really throw off what your available cash is during the other 3 quarters of the year. So we drill down and take it one step further to look at what your cash flow implications are for making these allocations, and we use a spreadsheet to do that. So today we're going to go through that spreadsheet and go into a little more detail about month by month how you're going to be spending money, how the allocations will be going to different accounts, and ultimately what that does to your bottom line in your operating expense account. So the first thing we'll do is just get familiar with this spreadsheet. The spreadsheet has a sample, and the sample is what is completed here showing January of 2016. There's also a master template that's available so that you can, if you mess up that sample, need to start from scratch, the master template you can pull up and relabel for each month. And what I recommend to my clients is you can use this for a projection to really fine-tune your percentages that you want to allocate, but you can also use it for budgeting so that you can determine what your percentages are, determine what your expenses are each month, copy that over month to month, actually then go in and overwrite what your budget is, and you can see how you're tracking each month. So it allows you to project forward as well as zero in on these percentages. So the first box that we call the number 1 box here in your spreadsheet is about income and allocations. This is where you're going to put the information about your sales from Amazon, about any income that you may get from your Shopify account or any other e-commerce type activity. You may have commissions that come in from some affiliate program. You can include that in the other income. And it's basically a place where all your income is recorded. And then from there, we will populate the target allocation numbers. They're the boxes over here in green. Those percentages will then show you how much money you need to move to your various accounts. So the system, the cash flow spreadsheet, allows you then to take that information based on your payout and then do your allocations. But for our purposes, we're doing it, completing this spreadsheet for the intent of understanding our cash flow. So we do it initially to understand how we think our cash flow and these allocation percentages are going to impact our operating expenses. So that's our main mission starting here today. So in this situation, what we want to do is look at the fact that we receive on average $5,000 in Amazon net sales for the first period. And these periods really track the time period as explained in Profit First. The 26th through the 10th is the first allocation period. The second allocation period is the 11th through the 25th. Those are based on the time periods that Mike describes in his book. The main purpose for those time periods is to get in a flow for when those funds come in. So your funds come in between the 26th and the 10th. In this case, we're showing $5,000 came in. We had income from Shopify for $2,000, $5 of other income, showing a total income of $7,005. From our profit assessment, we have seen that our percentages should be somewhere in the neighborhood of 50% going to inventory, 10% to profit, 18% to taxes, 8% to owner pay, and 14% to our operating expenses. Those green numbers should add up to 100%. The calculations on the right are taking the income number of $7,005, multiplying it by these percentages, and then dividing that up into the different accounts. So these totals, the total of these columns should add up to the $7,005 that we're showing up above. So that's how we work with the income component. The next piece of it, well, I'll show you first. Where do you get this information? When you're using this to track how you're doing, you'll want to pull that information from your payment from Amazon. So you've received a payment from Amazon. This is an example of the settlement statement. In this particular example, we've taken off the name of the company at the very top, and you can see that the amount that is transferred to your bank is going to be $2,206.40. So we would take that information and plug that into our spreadsheet. So we'll make that change here. 2206. And as you can see, what has happened then is all of the formulas go to work, and they recalculate all of the different amounts that you'll be transferring to your various bank accounts. What it tells us also is that with receiving that $2,206, we're going to have $590 available to spend on operating expenses. So the next portion that we're going to work on in this spreadsheet is we're going to look at where are we getting, what are we spending money on in that time period. So I'm going to scroll down. We'll look at box number 2 because box number 2 corresponds with the time period we're working on. So our income source says that our total operating expense allocation, so the income that we have to spend, our operating expense allocation that we have to spend is $589.54. And if we look at the expenses that we have during that time period, we can see that we have a credit card payment that is due and health insurance that's due, and it's showing here that our remaining balance is going to be negative. So having a lower amount come in during that time period is going to have a severe impact on our ability to meet our bills. If we continue on down to see the remaining expenses, till we pay all the expenses in the last half from the 26th through the 30th, and then the expenses that we have from the 1st through the 10th, when we pay all of those bills, we're going to have a negative cash flow situation of $744. We're going to be short that amount of money. Now, just to be sure you understand where we're getting this information, these items, these expenses, it's easy to pull that off of your bank statement, or if you have a credit card statement, go through and look at where you're spending money during that time period, and you can find out the things that are hitting on a recurring basis. And you want to include that in the time period that it relates to, from the 26th through the 30th or from the 1st to the 10th. And the reason we break it up this way is just because it's over the end of a month. But this is already telling us that the percentages that we had assumed based on our profit assessment is really going to hurt us during the first part of the month. The last part of the month, we're projecting to have a $10,000 payout. So if we get that $10,000 payout, and we look over here at box 3 where we're tracking expenses for the last 2 weeks of the month from the 11th through the 25th, you can see that by having that $10,000 payout, $1,820 will be allocated to your expense allocation. So while you may, while things didn't look good the first part of the month, they look a lot better for the last half of the month. Again, the items that you expend money on during the last half of the month are listed there. You may have your electric bill, you have sales taxes, maybe you're paying for a consultant. All of those things, if you look at your bank statement, you can find that information, figure out the day that it's normally charged to you, and plug that into your numbers here. So in this situation, when we look back up at the final tally, which is box 4, we see that looking at the income coming in that is allocated to operating expenses for the first part of the month and for the last part of the month, then deducting the expenses that happened during the first part of the month and the last part of the month, we're going to be short for the month by about $434. So that's why this number shows in red. It means that we're not covering all of our expenses. So that tells me that if these are normal expenses that we're going to have on a monthly basis, and these income levels are what we expect on a monthly basis, that we need to do some adjustment to our percentages. And over time, what you're going to want to do is reduce your operating expenses, but you've got to start where you are. So in this situation, we need to bump that operating expense number up, that percentage number up, until we cover all of our expenses while we're working on reducing those expenses. So let's move it up to 16%. We're still a little bit short. Maybe we need to go to 17%. And in that situation, by putting 17% to operating expenses, we're back in the black. We're breaking even, so to speak. But you see that our percentages showing up here on the left, we're at 103%. And there's no way to divide up those funds into more than there actually is. So we've bumped up operating expense 3%. We have to determine where we may be putting too much aside. And I would suggest to start, look at perhaps your profit account as a place to go in and reduce that number to 7%. And that makes us balance out to 100%. This is just getting us to a starting point. You'll want to monitor this month by month, but this is where you're going to start. If you have several payouts from Amazon that's not where you're not covering your overall operating expenses, that's a big red flag that you're not bringing in enough to cover all your expenses, and you need to aggressively start cutting those expenses. Even if you are covering all of your operating expenses at the percentages that you designate, operating expenses is where you need to focus your attention, because when you start paying attention to those operating expenses and reducing them over time, it allows you to increase the money that you get to take home, or the money that you can plow back into your business in inventory. So anything that you can do to save money, whether it's efficiency, innovation, just cutting out the stuff that you're not using, when you make that change in your business, that money stays available to you to put back into one of these other buckets. So it definitely is a pie that you can divide up in different ways. And as much as you can do to stay lean in the operating expense area, that gives you more money to take home and gives you more money to invest in your inventory to grow your business. So that's the overall explanation of how we use the cash flow spreadsheet. Once you have played with it to determine what your percentages should be, then you can go down to the tab and copy it over for month by month. Just simply click on, we're working in the sample tab, we can click on that sample, we can tell it we're going to move or copy. Down here you want to select the create a copy box and click OK. And when you do, it's going to create another exact replica of what we were working on. We're going to call this one February. Oops, typing in the wrong box. Go here. You have to actually click on the writing in the tab. We'll type in the word February 2016. And then that's our model for what we think is going to happen during the month of February. As you go through and receive your payout, you can plug that information back up in the top box. It'll calculate your expenses are already calculated. It will show you how things are looking for you during that month. So that's how we recommend you using the cash flow spreadsheet. Thank you for joining us. I hope this is helpful to you. If you have any questions, please take a look at our blog post and reach out if there's anything we can do to help.